I'm Bradford with the Penn-Pinterest Guide to Personal Finance, and in this video, I'm going to cover how to fill out IRS Form 1040 for tax year 2022 using the following assumptions. Filing status is going to be single. We're not going to have any dependents. We're going to be using W-2 income, 1099 INT income, 1099B income. We'll be only using the standard deduction and then not using any additional credits or deductions for this tax situation. Now, before we start, I'd highly recommend checking out the Form 1040 General Instructions, which I have linked in the description down below. Those, contrary to a lot of other government documents, are actually really helpful in using plain English to walk you through most of the aspects that you might have concerning your specific tax situation. It starts out with general changes from this tax year to the previous tax year, talks about whether or not you actually have to file taxes at all, and then it goes through each of the individual sections of the Form 1040 line by line and points you out to what additional documents or schedules you might need dependent on your specific tax situation. Now, with that information in mind, let's jump into this Form 1040 and actually go through it from start to finish. So here we have IRS Form 1040 for the individual income tax return for tax year 2022 for filing in the current year 2023. Now, the first section is just a lot of personal information that is helping the IRS identify that it is you specifically filing this tax return. So the first one that you're going to check is going to be filing status. For this situation, like I previously mentioned, we're going to be using filing single. And then the next part is going to be putting your first name, middle initial, as well as your social security number. For this example, this form is going to be being filled out by John Smith, social security number 123456789. Then you're going to put your home address, as well as the city, state, and zip code. Now, if you are filing from overseas, you're going to make sure you're putting the foreign country name, province, as well as the foreign postal code. Now, this section about the presidential election campaign, it gives you the option to elect to donate $3 to it. That's going to be up to you, but you might save some time just by burning those $3 in your fire pit out back. Now, the next section deals with digital assets. This is a change that came about a couple years ago, and this is basically dealing with cryptocurrency. Did you sell any sort of crypto transactions? Did you have any sort of NFTs that you dealt with in the previous tax year? For this situation, we're going to select no. And then the next one deals with the standard deductions, some things that might change it for you. This first line deals with whether or not somebody can claim you as a dependent. And then the next one deals with if you were born before January 2nd, 1958, or if you're blind, as well as information about your spouse. But for this one, because we're single, we're not going to be touching those elements. The next section deals with dependents, which is not going to be applicable for this form. And then we're going to get down to the actual line-by-line information, starting out with income. So lines 1A through 1Z deal with your standard income that you would expect to have. So line 1A deals with any income that you would have received from your W-2, which is going to be most people's primary source of income. So using this example W-2 that I generated, we're going to go and look and see how much we were paid for the previous year, and then we're going to input that in spot 1A. So for the previous year, John made $52,130.63. Now, the rest of these are going to be additional information that may or may not be on your specific W-2. It deals with household employee wages, tip income, Medicare waiver payments, taxable dependent care benefits, employer-provided adoption benefits, wages from Form 8919, other earned income, and then non-taxable combat pay election. And so for most people, sections B through I are not going to be a factor. So you're basically just going to be able to take whatever is in 1A and copy and paste it down to 1Z, where you're basically adding everything up from these previous sections. Now, jumping into line 2, this is going to deal with interest. So you're going to have tax exempt interest and then taxable interest. Now, most people, you're going to have a checking or a savings account. And if you earn above a certain amount of interest, your bank or credit union is going to issue you a 1099 INT for interest that you earned. A lot of interest is not going to be tax exempt, so it's going to be going into B. And so John, for the past year, he made $23.50 on his high yield savings account. And then when you look at 3A, these are going to be qualified dividends as well as ordinary dividends. That is going to be coming from tax form 1099 DIV for any dividends that you might have received from the previous year. Now, once you start looking at section 4, 5, and 6, these all deal with retirement, whether it's an IRA distribution, a pension or annuity, or any sort of social security benefits that you are receiving. For this situation, John isn't yet into retirement, so none of these sections are going to apply. And now moving on to line 7, this is going to be capital gains or loss. Now, it does say attach Schedule D if required. There is an additional form you might have to have, although most people aren't going to deal with it, and that's going to be IRS Form 8949. So the rule of thumb, and when you can go dive into the instructions, it tells whether or not you have to file which form or not. So if you receive any sort of 1099B, let's say you're trading stocks or any sort of mutual funds or any sort of ETF in the previous year and you made a profit or a loss on it, if you're only getting your capital gain or loss from that 1099B, all you have to do is attach Schedule D, and the 8949 is not going to be required. For this situation, John did some trading over the past year and he made $574.20. Now going on to the next line, line 8 is going to be other income from Schedule 1. A lot of people aren't going to be having to fill out Schedule 1 because it's a lot of less common sources of income. It could be like alimony, any sort of state-specific credits that you might have received from the past year. Always good to go take a look at it so you're familiar with what sort of things it covers. But again, it's not as common and most people aren't going to have to fill out Schedule 1. And then moving on to the next line, we're going to have 10. This deals with Schedule 1 again. Most people aren't going to have to deal with this. So actually skipping back to 9, you're going to be adding lines 1Z, 2B, 3B, 4B, 5B, 6B, 7, and 8. Now, if you didn't have any of this other income, basically what you're going to do is you're going to add this line, and then this line, and this gives you your total income for the previous year, and it's going to be $52,728.33. Now 10, we already talked about, is not applicable in this situation, so we get to line 11, and you're going to be subtracting 10 from 9. This is going to be your adjusted gross income. Since we didn't have anything in line 10, we're just going to copy and paste 9 into 11. And now we get to section 12, and this is going to be dealing with whether you're taking the standard deduction or the itemized deduction. Now, for most people, you're just going to be better off taking the standard deduction because you didn't have enough things that qualified as itemized deductions to actually make it worth it to take the itemized deduction, and you would actually end up paying more in taxes. If you have any sort of questions about what the actual standard deduction is, as well as in the general instructions, it's also on the left side here. So for single, for tax year 2022, you're going to have a standard deduction of $12,950. So we're just going to copy that number and put it in right here in line 12. Now moving on to line 13, this is going to be a qualified business income deduction from Form 8995 or 8995A. If you're not self-employed, this doesn't apply to you, but the general gist of this is based on the Tax Cut Act that was passed in 2017. You can deduct up to 20% of your profit from your business from your individual tax return. Again, not applicable unless you're doing some sort of self-employment income. Then now moving down to line 14, you're going to add lines 12 and 13. And so basically this is just going to be the standard deduction for most people. You're going to enter it there. And then you're going to take whatever is in line 14, and you're going to subtract it from whatever is in line 11. So for this is going to actually give you whatever amount is your actual taxable income. So in this instance, the taxable income for John for tax year 2022 is $39,778.33. Now congrats, that's half of your 1040 is actually complete. And now we're going to move on to the next page. And this is where you actually figure out how much you actually owe in taxes based on the income that you generated. So that's going to take us to line 16. And it says to figure out the tax, you're going to actually have to look and see at the general instructions that I mentioned beforehand. Now, a quick note, it's going to say, hey, do any of these other additional forms apply to you? They're not going to apply to most people. 8814 deals with unearned income for people that are under the age of 18. Let's say if you have a kid and you bought some stocks for them and they had unearned income, not from working a W-2 job, that would be qualifying here. So in this example, it's not a factor. And then 4972 deals with large lump sums that are being taxed. Think like if you won the lottery and you took a large lump sum, that would be something that would go in there, as well as some additional forms that might apply. To understand what would go in there, you'd have to look in the general instructions. Now the number I have right here is $4,568.00, and that is the amount of taxes that are due based on the income from the previous year. Now to actually see how we got that number, we're going to go jump into the general instructions right now. So here we have the actual general instructions for IRS Form 1040. Now on the bookmarks, we're going to be going down to the 2022 tax table, and then we're going to go down, see how much money did we make from the previous tax year. That was our taxable income. And then we're going to follow that down and then go over to whatever our filing status is. So for this one, we made $39,700 and some amount of dollars. So we're going to be coming in here. We're going to go 39,000 in that category. We're going to go over to single, and then we're going to follow that all the way down. And so it's 39,000. It was 700 and something dollars. And so you always round up. And so we go into this section. So the amount of money that is owed is $4,568.00. Now we're going to copy this number and we're going to go paste it back up in line 16 in the actual IRS form 1040. So now that we have that information in there, now moving on to line 17, this is going to be dealing with Schedule 2, and these are going to be additional taxes that you might have to consider. So in this situation, they're not going to apply, but always just take a look and see what are these various schedules and forms that they refer to in the 1040, so you actually understand what you are filling out and what you don't have to fill out. So for here, for 18, it's adding up lines 16 and 17. If Schedule 2 doesn't apply for you, just copy and paste 16 into 18. Now 19, this is going to be the child tax credit. There's no dependents in this example, so we're going to leave line 19 blank. 20, this is going to be amount from Schedule 3. These are additional credits and additional deductions. Now, again, these are credits and deductions that are not applicable to most people and most common situations. But anytime you have the opportunity to look at something to be able to reduce how much you actually owe in taxes, I'd recommend doing it. Take a couple minutes, go through the form, and if none of them apply to you, oh well. But hey, if they do, now you owe less money, and that means more money back in your own pocket. But for this example, that is not going to apply. So line 21 is adding lines 19 and 20. So if it's blank for you, you can just leave it blank. And so what's going to happen then is you're just going to copy whatever is in line 18 and paste it in line 22. And then again, 23, this is going to be other taxes, including self-employment tax from Schedule 2, line 21. If you didn't owe any sort of self-employment tax, leave that line blank, and then copy 22 into line 24. And the next section we're going to get to, and this is going to be dealing with payments. Line 25, this is going to be the federal income tax withheld from A, your Form W-2, which is the most common method that most people have to deal with. So you're going to go over your W-2, see how much federal income tax was actually withheld, copy and paste that into 25A. 25B, this is going to be from Forms 1099, and then C is going to be from any additional forms that apply to you based on the general instructions. Both of these are going to be left blank in this situation, so we're going to take whatever was in 25A and copy and paste it into 25D. Now moving on to 26, this is going to be estimated tax payments and the amount applied from your 2021 return. Estimated tax payments really only apply if you're self-employed and somebody else isn't withholding taxes from your paycheck on your behalf. And then the option to apply stuff from your 2021 return to 2022, that is an option that we'll look at later on this actual IRS Form 1040, but most people do not do it, so it doesn't apply. So since most of the income is generated from a W-2 in this example, and we didn't have any sort of self-employment income, we're going to leave line 26 blank. Then continuing down, line 27, this is going to be the earned income credit. This is something that applies to very low income individuals or low to moderate income individuals with children. John makes too much money to qualify for the EIC credit, so it's not going to be applicable here. 28, the additional child tax credit, no dependents, so not a factor. 29, the American Opportunity Credit, that's going to be dealing with a credit to help you pay for the cost of your undergraduate education. Not applicable in this section. 30 is blank. 31, this is amount from Schedule 3, line 15, as previously mentioned, not a factor in the situation. Then 32, you're going to be adding up lines 27, 28, 29, and 31. These are your total other payments. In this example, there's nothing there, so we'll leave it blank. And then 33, if everything else was blank, you can copy whatever was in 25D and paste it in line 33. Now the next section that we're going to go to is whether you owed a refund or you actually owe taxes. Now in this situation, did you overpay your taxes or did you underpay your taxes? A lot of people, unless they have a complicated tax situation, they're probably going to be overpaying their taxes, so they are going to be owed a refund. So for this situation, you simply look, how much did you actually pay in taxes for the previous year, and then subtract the amount that you actually owed, which is going to be in line 24. So for this situation, Jod is owed a tax refund of $460, and that's what we're going to put in line 34. 35A is the amount that you want refunded to you. Just always put the full amount. So whatever is in line 34, put that in line 35. And then the next section, 35B and D, as well as C, just select based on your bank, what the routing number is, what your account is, and whether it's a checking or savings. And this is going to help you get your tax refund more efficiently by having it actually automatically deposited versus receiving a paper check. And then line 36, this is the amount that you want applied to your 2023 estimated tax. Now, if you're not self-employed, just always leave this blank. Maybe you are self-employed and you just want to use some of your refund towards your taxes you're going to owe for the current tax year. You can decide how much you want to put in for there. I would just recommend keep that money instead of giving the government a free loan. Use it for your business expenses and then pay your actual quarterly estimated taxes at the later dates that as they apply. We're going to be moving on. Amounts owed, 3738, aren't going to apply if you're owed a refund. And then the final sections, this is going to be third-party designee. Do you want to allow another person to discuss the return with the IRS? Are you using a CPA or are you using some sort of professional tax preparation software? If not, the answer is going to be no. And then you would put their name, phone number, what their PIN is. Or if you are an elderly individual and you have like a child helping you fill this out, that's where their information would go. Then the last section, this is going to be the sign here. So it's going to be your signature, whatever the date is, whatever your occupation is, and then you're going to be putting your PIN in. If this is your first time filing taxes, you're not going to have one. If you have filed taxes before, you should have your identity PIN that the IRS gave you with your actual tax return once it was accepted. Now at this point, you have two options. One, you can literally just print this out, sign it with a pen, and then you can mail it in to wherever section it tells you on the IRS 1040 general instructions based on how much you make and where you live. They're gonna have different centers to actually process your tax return. Now, what I would recommend is actually go over to www.irs.gov and use their IRS free fillable forms. And that is going to allow you, unless you have some sort of self-employment income or more complicated tax situation, to be able to e-file through the IRS's website, which means two things. One, you're actually going to be able to just fill all this information out on their website. You don't have to worry about your forms getting lost in the mail. And it means if you are owed a tax refund, you're going to get it a lot faster, as opposed to if you use snail mail, which instead of getting your refund within several weeks or a month, you're going to be looking at multiple months before you ever see that money deposited in your account. Now, if your tax situation is more complicated than what you saw in this video, we have quite a few videos down in the description that go over some of the more common tax situations, including both self-employment income, if you have some sort of partnership or LLC, and what sort of taxes you have to file there. Now, if you decide after going through all these videos, you don't want to file taxes on your own, I would highly recommend checking out Free Tax USA, because they're going to allow you to file all of your federal taxes without any sort of stipulations on whether or not you make self-employment income or not, for free, as well as a nominal fee to file your state taxes. Thanks for watching, and from your first penny to your first million, we're here to help.